On our first conversation for the day, because that is quite important, looking at the factors surrounding this issue as regards the Access Holdings that has actually seen some sort of appreciation in terms of its stock. Now, Access Holdings successfully concluded its rights issue, raising 370.41 billion naira despite the disqualification of about 41.65 million shares worth about 822.60 million by the Central Bank of Nigeria. Now, the offering, which was oversubscribed by 5.76%, demonstrates some sort of strong investor confidence in Nigeria's largest bank by assets. We saw gross earnings surge by 114.5% year-on-year to 3.4 trillion naira in the first 9 months of 2024, reflecting some sort of robust growth. However, the disqualified shares and invalidated applications raise questions about regulatory compliance. So this morning, Nabila Mohammed, research analyst, Chapel Hill Denham Securities, joins me to talk about this. Thank you so much, Nabila, and compliments of the season to you.
Compliments of the season to you, John. Good morning.
So over 370 billion naira in a rights offer to boost its capital. What does the oversubscription of Access Holdings rights issue signal to investors on the Nigerian exchange?
So I think you've already captured it in your opening statement. The fact that it was oversubscribed just shows the level of confidence that investors have in the Access brand. And we know the story of Access. We know how it came from being at the bottom in terms of lists of banks in the country as far back as 10, 15 years ago, and where it has comfortably placed itself right now, being the largest lender by total assets, as you rightly mentioned. And even by gross earnings, we have seen that the Access group has continued to own that spot in terms of being the top and being the fastest growing as well. So all of this just reflects the confidence that the investors in this particular group have in the corporate strategy, the philosophy of the group, of the Access Holdings group entirely. So yes, I would say that yes, it has just shows how confident that investors are, and the fact that it was oversubscribed speaks volumes.
Now, Access Holdings seems well on its way on an expansionary plan, as we see it. But do you see that having an impact on the broader Nigerian banking sector, like a similar capital raising efforts by other banks?
So I would say yes, Access has always been on an expansionary drive. We've seen them year in, year out come up with different expansions and acquisitions, and all in the bid to improve their profitability, to enhance their footprint across the African continent. In fact, as they put it when you speak to management, what they say is that they want to be Africa's gateway to the world. So it has just shown that with the level of expansion, the level of acquisitions that we have seen over the past couple of years. However, they did mention during their facts behind the offer, behind the rights, that they will be embarking upon their consolidation phase by mid-2025, and that would unlock a lot of value for investors. So investors, I believe, are already positioning themselves ahead of that consolidation phase that will see them reap the benefits of all the expansions and acquisitions that the entire group has embarked upon. So Access has been known for that. We need translate to the other bank, at least what comes to investors' mind when we talk about expansion in the banking industry is Access Bank, because they are well known to, expand and acquire based on what is the business accretive to them. And we haven't seen any acquisition or any expansion drive that they have embarked upon be nothing short of better business opportunities and growth opportunities for the group, and as well a potential reward for investors at the end of the day.
Okay, so you talked about the holdings increasing its profitability, and we also see the lender's share capital at 600 billion naira, which is now 20% above the minimum required for international banks operating in West Africa. So would you expect at this point that the lender would give more money or provide more money in terms of loans to businesses and individuals with competitive interest rates?
Providing or more business loans to corporate customers or retail customers, as the case may be. It depends on a couple of factors. The first is the macroeconomic conditions. Of course, it is expected that when you have been capitalized, you would want to carry out your core or primary function of being a lender in an economy. And that is what the bank will want to embark upon, but it has to be supporting macroeconomic conditions that would engender the bank to be able to provide more lending facilities to customers. That is one. The second is that there has to be the demand as well from the borrowers or from the customers, as the case may be, to be able to show and get or secure facilities from the bank in order to carry out their maybe capital expenditure activities or working capital requirements and all that it comes with. So it has to be a blend of these two. And at the core of everything, despite demand, despite the macroeconomic conditions, the bank itself would have to make sure that it tightens its credit monitoring ability in order to make sure that it does not lend maybe just for lending sake. Rather, it is lending right, and that lending right is building economic development, not just for the business in question, but also for the environment at large.
Well, you talked about how Access Holdings have been able to grow its financial assets. How would you describe its strategies when it comes to addressing challenges faced by other Nigerian banks? We're talking about inflation, rising operation costs, currency devaluation that a lot of businesses face, but here they are.
So put it this way, one thing that we should focus on really is the ability for a business to increase and improve on its revenue. Now, the expansion drive that Access has been backing upon has been business accretive because, as I earlier mentioned, they have positioned themselves as the largest in terms of gross earnings, the largest in terms of total assets. And what that simply means is that in the long run, when those assets are really put to use, when they sweat the assets that they have, amassed over time, we will definitely see it unlock value for investors. Yes, there is a bit of operating expenses increasing at rates that are even higher than inflation, and it cuts across all the banks. But one thing we want to look out for is the ability to improve on their profits, improve on all income streams faster than they see their operating expenses or any cost-related line item increase over the same period, because that is really what will boil down or trickle down to their profitability at the end of the day. So the ability to grow income faster is what we should focus on, and that will translate to profit at the end of the day for the bank.
Okay. Well, it wasn't all uhuru for Access Holdings because, the Central Bank of Nigeria disqualified about 41.65 million shares worth 822.60 million naira. So what would you say were the infractions committed in this, and how do you think that would affect investor confidence looking at future capital raises?
Two things based on your question. The first is that I feel that investors should focus on the fact that 100% of the capital that is required by the CBN based on the capitalization exercise has been met by the bank. That is the first. Secondly, the fact that 42 or 41 million shares were disqualified, that accounts for around 0.2%, which in my opinion is negligible, given that they have already met the required amount. And again, based on the fact that it was rejected, they did mention that the reasons were stated in the capital verification report according to the notice that was released on the NGX. And the person did not have access to that capital verification report. But what we should focus on is the fact that 100% of the capital required has been met. Access has crossed that hurdle, even with an oversubscription, as you rightly put it earlier, of around over 20%, 120% at 600 billion, 100 billion more than what is required. That is what investors should focus on, because that is what will be the capital buffer for the entire bank going forward, and it would engender them again to carry on their responsibilities of lending to sectors of the economy.
Yeah, so going forward, Nabila, well, the rights of, according to what we understand, as part of Access Bank's plan to raise about $1.5 billion to to help meet regulatory norms after the central bank ordered large commercial lenders to shore up their capital tenfold to about 500 billion naira, and the deadline is around March 2026. Now, they've been able to secure about $228 million of that $1.5 billion. How sustainable is this growth for Access Holdings? Do you think it can meet that target?
Okay, so one thing you should know for sure is that the 1.5 billion program that was agreed upon by the shareholders as a capital raising program by the bank, it shows us that the entire group is looking beyond just meeting the CBN's requirements. They are focused on their strategy, which is a long-term strategy. And they have been embarking upon series and series of expansion and acquisitions, and this is going to be facilitated by these capital raising exercises. So in simple terms, what it means is that that particular program of $1.5 billion that was set up by Access Holdings in order to is beyond just meeting the requirements for CBN. It is also for the group's, it's also part of the group's strategy to be well capitalized in such a way that whatever shock that comes, they have enough buffers to cater to that shock. So, and they have done series of capital raising previously. We have not had any situation where Access Holdings capital raising was not successful. So this particular program is going to span as long as they have that program registered for. They have raised 228, as you rightly put it, based on exchange rate currently, and you definitely see them come to do more, not because they want to meet the requirement, but because it is part of their strategy to be that well capitalized in order to carry out their primary function of being a lender in the Nigerian state.
Okay, so what are the implications of these gross earnings? Looking at a growth of about 114.5% on investors and, of course, the company's shareholders.
So investors really are more concerned about profit of the business and not the gross earnings, because it is from the profit of that business that they would get returns at the end of the day in terms of dividend or other things that may come with. So their major concern is the fact the ability for Access to really improve on its profit year in, year out. And if they are able to sustain that improvement in terms of profitability, either by being more operationally efficient or being able to improve upon their earnings year in, year out, that is when that is what investors will be more concerned about. And they have already alluded to this fact that come their consolidation phase, we should expect as investors a lot of value unlocked from all these acquisitions and expansion exercises that we have embarked upon in the past year.
Okay, so I'm a bit more concerned about other banks within the sector. Of course, there are different capacities of growth and all. But do you think there's something they also can do to probably increase recapitalization and rise probably above or towards that threshold, 500 billion naira, has been stipulated by the CBN?
So if we're judging by all the other banks, I do not really think we should be concerned because, one, the timeline is still March 2026. That's one. Secondly, most of the banks have already come out to carry out their capital raising exercises and are still in the process of verifying the capital that they have raised. Only a couple of banks still would have to still come to the market beyond what they have previously done in order to meet the threshold. I'm speaking to the likes of Fidelity, the likes of FCMB that will still have to come to the market, that will still have to come to the market to meet that 500 billion. But all the other banks that have come to the market, the amount that they offered, the amount that they raised, is still undergoing the capital verification. And once it is verified, we will now know if they will need to come back to the market. Access has already crossed that hurdle. They do not have to come back to the market because they are well above what is required. And I do not see any of these banks, especially the internationally licensed banks, taking a step down, because there is also the option of stepping down on the license. I see them coming back to the market if they would have to make up for the shortfall, and we still have March 2026 as the deadline. It hasn't been moved. So there is still that time for them to come back to the market should their capital verification exercise return in such a way that they would have to still raise more that would qualify to meet the requirement.
Okay, so still talking about capitalization, I want us to focus on what you think the priorities of Axis Holdings should be moving forward from here. We're looking at probably some specific markets or interests that can further boost their asset capabilities.
Yes, it's one thing to raise capital; it's another thing to sweat the capital that you have raised. So I think that going forward, what would be the focus of the bank, given that, as I earlier mentioned, they have said they are moving into the consolidation phase, we would see them sweat these assets that they have amassed over time. We would see them unlock a lot of opportunities in terms of more earnings, more businesses, more trade volumes, because with the recent expansion that they did in Malta, it sort of puts them in a spot where they can easily be Africa's gateway to the world, which is what they always find themselves in. And that is what we would expect from them going forward. We would expect that we would see some of these acquisitions really start to bear fruit. We would see it translate to more value for investors. We would see them really showcase their ability in terms of lending to critical sectors of the economy in order to contribute their own quota to just enhancing or bringing about economic development. So it's a whole lot of expectation. But at the end of the day, if it is an investor, they just want that to translate to higher profits and, of course, higher rewards for them at the end of the day. So it's a lot of expectations, and we cannot wait to see what they have to do during when that consolidation and integration phase
okay, so of course we talked about expansion a while ago. Now we see that the lender has operations in about 23 countries. Earlier we saw it agree to acquire Bidvest Bank Holdings Limited with the hope of expanding its operations in South Africa. So I'm looking at all this and I'm wondering if these guarantees that this subscription success will make Axis Holdings more resilient to shocks and less likely to fail, because we've also seen government policies over time in the financial sector also affect the operations and, of course, the finances of these banks.
I would put it this way. What is expected with regards to capital is that it will prepare you or prepare the bank in question for any shocks that would come. And that was the rationale even from the get-go when the CBN announced that there's going to be a recapitalization exercise. It's really just to, number one, strengthen the financial services industry, strengthen their capital base, boost it in such a way that they would be immune to whatever shocks, and they will be able to take on large ticket transactions that would translate to economic development, because they are providing lending facilities to critical sectors. So I feel that whether it is the expansion, whether it is the acquisitions that Axis Holdings is doing, it all boils down to the fact that they are trying to expand their footprint across the African continent and even beyond, in order to make sure that they have that opportunity when it comes to enabling or providing services from one continent to the other. And I believe that should or translate to more businesses, more profits for them, more earnings for them, if they are really able to sweat these assets. So all these acquisitions, whether it is the Bidvest Bank, whether it is the expansion in Malta, whether it is the acquisition in Mauritius, just to mention what it is, it should translate to better earnings for the entire group, and it should, engender them again to provide their lending services to the critical sectors of the economy.
Okay, so to wrap things up, I'd like to get your perspective on how Axis Holdings could plan to balance expansion with technology-driven growth now, with increasing pressure to adopt digital banking innovations.
I think, if I may put it this way, they have already been on about the fact that they are incorporating a lot of technology in their mode of transactions. And we've seen it in the way the applications have gone over time. We've seen the introductions that they have done in terms of their payments, in terms of their lending, how it is easily accessed. We even saw it play out in this particular capital raising exercise because it was more or less technologically driven. And all this just shows that the group is indeed involved in trying to marry technology with what its core function or core business is, which is the business of lending. And that is what we would expect going forward because technology has come to stay. And for any business that would want to survive or thrive, they would have to include that in the way they do their business because the world is moving very fast.
Mm. And this will probably be like Access Holdings trying to blaze the trail and give other traditional banks and probably fintechs a run for their money. Well, seems good.
Yeah.
Of course. Nabila Mohammed, research analyst at Chapel Hill Denham Securities. Thank you so much for sharing your insights with us.
Thank you for having me.